All right, guys, we're going to jump into this one. I was just laughing because I was trying to flex the arms a little bit, but I won't show off too hard. Let's instead show off with, wow, we got some thunder happening here. Let's instead show off with how much money we can make. Well, money, muscle, same thing, right? All right, so anyways, let's talk about, some put options and how to sell LEAP put options, all right? So we're going to talk about selling LEAP puts. So what the heck is a LEAP put? And why would you want to sell a LEAP put anyways? So here is what a LEAP put option is, all right? A LEAP put option is basically selling a put option that's far in terms of date, because a LEAP basically is a long-term option. So a LEAP put is a long-term put. Now, when would you want to sell a long-term put? Well, let's go over some examples. So first of all, we're going to look at Palantir. Palantir is one of my favorite stocks. I like Apple. I like a lot of different stocks, but let's just take a look at Palantir. This is a very cheap LEAP put to sell. And by the way, this is the lazy man's way of creating income. If you're lazy like me and you want to retire and have consistent income, well, LEAPs. These are like the best things to do, because once you open up a LEAP, you don't do anything else for the next 6 months. This might be a little bit too boring for many, but it's also going to be a really good tool that you can have in your portfolio. Maybe you don't do your whole portfolio in LEAPs, but let me tell you, you could. You could do your entire portfolio just selling puts, all right? So here's what a LEAP put option would look like. You'd go to sell put option right on Palantir, and then you would go to something very far into the future. So you can go to, let's say, January 17, 2025. Yep, 2025. This would be an expiration day of 239 days out. And you can basically sell something like the $20 put. Now, how likely is it that Palantir goes below 20 in the next 239 days? Not that likely, because most stocks go up over the long term. So look, check this out. The delta here is 0.34. However, I will say one thing. Options, the delta is very accurate in the short term, but in the long term, they are not that accurate. Because the truth is that Palantir and all stocks in the long term go up, and the delta here is saying 0.34, but in all reality, you can make a lot of money because, again, long-term stocks go up. And if you sell out of the money options, that is going to work. So here, if you sell a $20 put, it is going for $256. All right, that's pretty high. This return right here is well over 10%, okay, in 239 days. It's not the biggest return, but let me tell you, it's a very safe return, all right? Because the worst thing that can happen is you can get assigned on Palantir. Now, look, you don't have to use Palantir. You can also use this on other blue chip companies, all right? I don't know if Palantir actually falls into the blue chip territory. A blue chip stock will be something like Apple. So let's take a look at Apple, all right? This is one of my favorite stocks that I have a pretty large position, actually. We have 7,000 shares of Apple, $1.3 million in Apple stock. Quite a lot. But look, you can do a LEAP put option. So go to Trade Apple Options. You go to Sell Put. And then again, I'm going to pick the same expiration day. So I'm going to pick an expiration date of, let's go for January 17, 2025. So right now, if I sell the $180 put, you can see here how the return is 3%. It's not necessarily the best strategy to use, but it is the safest strategy to collect income. Here's my suggestion. If you want to use this strategy, a LEAP put, I would actually recommend doing it on margin. Let's briefly talk about margin. So I'm going to close my computer down because this is going to be a very, very important conversation that we're going to have about margin. Like seriously, margin trading is super misunderstood and a lot of people think that it's really risky. Fact of the matter is, margin trading is actually not that risky if you do it properly. And I guess today's video is a little bit different because selling put LEAPs is something that I've actually never covered on this channel. There's a lot of different strategies, by the way, that I don't cover. The reason I don't is because I only cover things I believe in. I only discuss things that I believe in. And some strategies are just a little bit too risky. Maybe I'll cover them on the channel, but I just don't think they're the best use. Put LEAPs, to be honest, prove me wrong. I hope you prove me wrong, but they're just a little bit too boring. They're too boring because you sell an option and then you just wait 6 to 12 months. And for most people, you're probably clicking off the video because you're like, I don't want to wait 6 to 12 months. But listen, it's actually a really good strategy, especially if you use it on margin. So how do you use margin, okay? Well, there's different brokerage accounts. For example, Robinhood will typically let you use like 50% of your portfolio on margin. So let's say that you have, $100,000. Robinhood will allow you to use 50% of that. So $50,000. I was gonna say 500,000 because I'm working with a 7-figure portfolio. You don't have to work with any specific amount. By the way, you can sell LEAP puts on even a really, really cheap stock. It can be $1,000. So you don't have to have a big portfolio to do this. You can reap the benefits of slow, large account strategies, even with a small account portfolio. You don't have to just sell LEAP puts. You can also sell LEAP put credit spreads. If you watch my channel, if you're subscribed, you've seen me talk about put credit spreads. Phenomenal strategy. You can also use the same put credit spread strategy to do LEAP put credit spreads. By the way, a LEAP option is like a year out option. It's like a year out to expiration. But for me, a LEAP is just anything long-term. And nowadays, like people kind of have like a twisted reality of what long-term is. I consider long-term anywhere over 6 months. So 8 months is a LEAP. Maybe it's not a LEAP by definition, but who cares about definitions? We're just trying to make money here, right? We're all trying to just make consistent, safe, passive income or grow our wealth, grow our portfolios, get away from our 9-to-5s and eventually retire. That's what I talk about on this channel. I've been able to retire, which is a really phenomenal feeling financially, but still are the things I want to accomplish in life. So when it comes to how to use margin, well, Robinhood will let you use 50% of your money as margin, right? So again, 50,000 on 100,000. But other brokerages, I had TD Ameritrade, they switched me over to Schwab, which I don't really like switching brokerages, but my second portfolio now is in Schwab. And I don't know exactly how they work yet, but I'm assuming it's the same as TD Ameritrade. And they actually gave me a lot of margin. So I have $2 million in my other portfolio, and I was selling a lot of put options. I was specifically selling LEAP put options on Google. I sold LEAP put options on Tesla. By the way, I sold LEAP put options on Tesla at 150, and Tesla actually shortly went under 150. And I don't want to say I panicked. I didn't panic. I didn't make any moves, but I was kind of thinking to myself, this kind of sucks. But it pulled back up. So anyways, LEAP puts can be, even in the worst case scenario, like Tesla fell a lot. I sold Tesla at the peak. I sold this LEAP put option like last year at the peak. This year it touched into the money. I didn't close the position. Now it's out of the money again. So even Tesla had really bad performance and I still ended up profitable with LEAP put. Now look, because the return is kind of low, you don't necessarily want to tie up your capital, right? By the way, we all have different goals. Some people have a expectation or a requirement that they make 50% a year. Some people are chasing 75% per year. Other clients are just want 3% per month, okay? 36% per year is phenomenal. It just depends, right? But when it comes to selling LEAP puts, the return can be really low. So you don't want to sell a LEAP put with all your capital. Instead, what you want to do is you want to use some margin. Listen, margin can be really risky if you don't do it correctly. So if you sell a LEAP put, stick to something like SPY. I've talked about SPY a lot on this channel recently, specifically because I think SPY is honestly the best. Like what I learned in college was like SPY, the index is really hard to beat. And honestly, most people are not beating SPY. They're not beating the index. I've beat the index many, many years in a row. This year, I am basically, I think, about even with SPY. So it's not easy. Even though I have a lot of experience, I've been doing this for a very long time, it's still not easy to beat the market because the market has a basket of everything and you have to really pick your stocks correctly to beat the market. It's not easy. If it was easy to beat the market, everyone would do it and we'd all be rich. And the fact of the matter is, very few people are actually very rich. All right. That's because you need to have the right strategy. You need to have the right mindset. And honestly, this stuff takes a lot of time. That's why I just plain and simple, I don't really work with get rich quick people. People that want to become rich overnight, typically low IQ people. Just being honest. Most smart people understand the more that you learn, the more you realize like, wow, there's so much more to learn. And that's the case with me with option trading. Like, yeah, I'm one of the best at trading. I'm one of the best at educating, but I still have more room to run. Like I still have more to learn about trading. I have more, room to learn about, giving proper coaching and teaching people how to get faster results. Many of my students are making $10,000 a month within 3 to 6 months, but I want to make it faster. I want to make money faster too. It's pretty difficult to be the best, but what I look for when I look at selling puts is always keep improving. Always keep improving in all areas of your life, but always keep improving in your stock selection. So improve on the stocks that you pick. Also, when you're selling a LEAP put, you want to sell a LEAP put that's like pretty low delta, to be honest, because if you sell a lower delta, it's just better. The chances of getting assigned are lower. So like, as we were looking at the example, the delta was 0.34, right? So that's pretty good. When I go for LEAP puts, I can go a little bit higher on the delta because typically when I sell a put option, it's like 30 delta, 25 delta. When I'm selling a LEAP put, I can go even 35 delta. The reason is because I'm just more confident that over a longer period of time, it's unlikely that a blue chip stock will fall down. So this is actually something that I wish my parents would do. I also made a little bit of a mistake with my parents. I told my parents to buy Tesla stock. They made some money, but then they ended up losing money. Now they're like kind of afraid to invest. And the fact of the matter is you still always want to be selling options, selling puts. I never got them into options. They're just intimidated. But listen, simple advice. not from a financial advisor, just from a multi-millionaire guy on the internet. Okay. Sell puts often. Every time you get paid or a paycheck or a commission check or whatever, however you make your money, put it into the market by selling put options, whether it's shorter term puts, which are very, very viable. I've talked about selling put options on the channel many times. 30-day puts are amazing, 60-day puts, 90-day puts, but also mix in some selling puts on margin on a lower delta. Try this, very, very low delta, use margin. Now, a typical question I do get is, how do you use margin versus your actual capital? Well, the thing is, you first have to use up your capital before you can use margin, logically. You can't dip into margin without using your capital first, okay? So for your main capital, I recommend that you do covered calls, follow the strategies that I talk about on this channel, have your money invested. Once your money is fully invested, let's say you have 100K, for example, let's just say you have $100,000 worth of Apple stock. Now, I would sell an SPY LEAP put 6 to 12 months out, very low delta, collect income, set it and forget it. That's literally as easy as it is. Yes, it only makes 3, 4, 5% per year. But listen, if you're making 3, 4, 5% a year, not your money, not paying interest, then amazing, right? It's like buying a house, okay, for $500,000, okay, and then you get paid $4,000 a month in rent, okay? But then all of a sudden, like, someone comes up to you and they're like, well, I'm going to live in your backyard. We're going to make a little area for me. And it's going to be, I'm going to pay you an extra $1,000 a month. So now you can make an extra $1,000 a month. And let's just say the guy's like, I'm going to build a house myself. Don't worry about it. I'm just going to build myself a shed. Crazy example. I get it. But thing is, there is some risk. I mean, there's some risk. The guy could be crazy, but let's say he just gives you upfront money. He's like, here's $12,000, $1,000 a month. I'm going to be here for 12 months. Here's $12,000. I'm just going to build myself a little shed. I'm not going to bother nobody. And let's just say it's in accordance with all the rules and regulations of whatever state, country you're in. That would be free money, right? That's free money. So the same thing is with this LEAP put strategy on margin. It's free money. So this is something that I always talk about with my private clients. I am talking to them, especially if they're higher net worth, especially if they have $500,000, then implementing this strategy. By the way, when I sell options like LEAP puts, typically with my higher net worth clients, I don't sell LEAP puts as much. I sell like 30, 60 or 90-day puts. Not that LEAP puts are like bad. It's just that we typically go for single stocks and we're typically a little bit more aggressive. But if you have a 500K portfolio, and you can make an extra 0.5%, not a lot per month, but it's 0.5%. 0.5% on $500,000 is $2,500 out of thin air. So if you have a 500K account, $2,500 per month is an extra $30,000 per year. You can now see why it's obvious that, some of my private clients, they just love working with me because we get extra money from thin air without even trying. So it's really easy money if you think about it. If you would like to become a private client, I am doing a special offer just for this video. I've never really done this before. I don't personally like selling my time just because I don't need the money, but I have some time right now. I would love to work more with you guys. So if you specifically have a bit higher net worth and it's over $100,000, you want to learn how to use margin properly, safely, and you want to scale up your portfolio, I'm going to take personally 5 calls for the next couple of weeks. You can book that directly with me if you want to become one of my private clients.